A very good afternoon. I am Charles Brian here, an ICT student. uh, Today I will be reviewing and journaling here live my executions as a student based on what I've learned from ICT. That's Michael Huddleston. Quickly, I will start by reviewing the trading day that was yesterday, and I trade mainly the New York session. So for yesterday, we had a consolidation that started the day. Then we had a rally that started during the London Open, but it continued into the London session. So uh, within the London session, when the New York was opening yesterday, it reached at a time when the market had been rallying up, and even here it had continued rallying up. So we're looking at opportunities to sell because the New York Open is an opportunity for retracement, and given that the market has already taken out relative equal highs, we'll be looking for a manipulation above here during the New York Open, and then an opportunity for a sell. While our reference points would be this fair value gap here, this one in here, this one in here, but most importantly, this one right down here. This that formed right after this initial start from the consolidation to rally up, the one that is left in here. So the manipulation happened during the New York. We had the market came initially rallied down. We had sellers, their stop losses were above here. We had buyers, their stop losses were above here. Then it came, ran back, gave us relative equal lows both here and then comparative to this one, and then it gave us relative equal highs, then ran them out. Once it ran them out during the New York the New York Open, we'll now wait for a break in market structure. There was a break here, and then we had this final break, and then a fair value gap here. As you can see, I entered the market and then got out from this level, but the market went back to this fair value gap. By that time I'd left the trading, and then it ran back to this point. So from this price swing point, which was the initial one for the rally right from the London Open, we had the market now rallying off of that during the next of the New York session. So market rallied, there's a break in market structure here, and then it continued to rally. It broke. Now once it broke, we had two levels. There is a level one where it broke this retest of the market structure. There's a level here. This retest rather of the fair value gap, there's a retest here, then there's a break into that high of the New York Open, and then there's a fair value gap. This was filled, but this wasn't. We would have wanted this to be filled. Why? Because it was better situated in the discount compared to the other one, which was in the premium. So we would want to see how market reacts beneath of here. Also, what gave the confirmation of this trade was that the farthest back that you could look, there was actually a price level around this that price was reacting off of. So price continued running, and then it's ultimately started consolidating. When it had an relative equal highs here, came created relative equal lows, ran, created relative equal highs, then ran them out. We'll now be looking at it to take off this. It came breaking market structure. There's a fair value gap here. It returned towards the same fair value gap. Then ultimately it ran out the lows that were beneath off of here, and then ultimately beneath off of here. After it ran those out, it now had a break in the market structure towards the buy side, and after we had that break, there was this first break. This was filled. Then there was this one as well. This was filled, but there is a part of it that is still open. That would be a price to reference. There would be a level to reference price. So there's a rally now up. Once price breaks higher here, we expect there is a fair value gap in here. Price returns a bit, and then price continues to rally. I would like us to get, because this one here was when price was after it had taken off, because we had liquidity lying. I think I would be safer if I put this liquidity pools down here as they should be. There was this liquidity pool, then there was another that was lying down here that was initially taken out, I think as a first. There was this one that was lying down here, price took it out, returned higher, then, and as it returned higher, we had relative equal highs forming here that would have expected price to return to, but only after taking out the liquidity on the sell side. So it came up after it now took off the liquidity beneath here. That's now when it started rallying. We now aim at this liquidity and ultimately the one that lay above it right here. So as price left here, the liquidity that would refer to later on would now be the one that lies beneath of here, and then the one that lies beneath here. So price rallies up, still leaves us with, before it runs off of those, it leaves us with liquidity lying beneath these two price points down here. So we would expect that price would want to at least return to this fair value gap, and even probably run much lower than that. So you look at that price level, so you wait for the time where price breaks that, and then there is this one as well. Those are the price levels, and once it breaks those, would want to have a fair value gap in there, which we did have. The most suitable one would now be this one right before it rallies up. So we would have this as our fair value gap from here to here. It ran a bit much lower than that, and probably came back to this other one that lay just beneath here. It returned a bit lower. Initially it respected this, then now it continued rallying up. Once it broke here, it came back to the fair value gap. It came back a bit lower. I would have expected it to hold here, but it came back much lower. Now this is at the start of London. We started London by price returning to this price point here, and then continue to break out liquidity. And from that time, price has continually rallied. From here, after it broke, this was probably the other price point for this whole swing that would want to look out. There is this price level that is left. We would want to see how price reacts off of that. But otherwise, price continues now rallying upwards, consolidates a bit, returns, and then continue to rally upwards. So by the end of this, it consolidated a bit, left us with relative equal highs above. It seemed as though at the end of London, price was starting to consolidate, gave us relative equal highs and lows, and then returned to run them out like it has done there. So it ran them out, but left liquidity on the top side, ran those out, relative equal lows are created here, and same as here. Because of this, we have liquidity that has been created lower. So there is liquidity that has been created much lower here as well, beneath off of that. So we have liquidity lying to the sell side and then onto the buy side as well. We would want price ultimately to continue that rally to the upside. Now right now we have come when the price is a bit consolidating here, and then we want to see if it has what it takes to rally towards the initial scaling point that we would want to look out for would be this price point that is beneath here, and if it's to go below, much lower than that, the other price point to look out for would be this one that is much lower, and if it is not that one, then it would probably be this that was left much earlier. This one can be attacked a bit later on, but the one I would be most interested in would be this. So I want to look at the manipulation that will happen here to have price go down. There are many alternatives here. We have already taken off some liquidity here, and in this case, the other scenario would be that if we have a break in market structure, then price should continue running to take this out. But if we look at it, there was a failed break in market structure here, another failed one that occurred here, and another failed one that has occurred here. Then there is one here that seems to be respected. There is this one here, this break in market structure that seems to be respected. We would want to see price staying beneath of this if we are to have the ideal, because there were relative equal lows that were here as well. Yes, okay, there are these that have been left down here. This is before I put in the demarcation, but price actually managed to take out the ones that were here. So relative equal lows being taken out, breaking market structure, you would now want price to take off liquidity that lies as far as this change. The next reference point would want to look at price reacting off of is two levels. One is this price level where we had a break in market structure to the downside, and actually it's where I would most interested to want to see a reaction. But there is another one above that, which is this one. We would want to also see a reaction off of those, and in case it doesn't react off of that, I would want to see the price rallying much higher and then seeing. So I will now introduce in my demarcations for time, and this is where I have the 7 o'clock morning bell was started. It has found that price was coming back to this price point and then went above. I'm going to introduce this because I want to look at the manipulations of price that are occurring within the New York Open itself rather than the combined of it all. So my charts are delineated quite clearly, like I could see. At least we could see here that there was liquidity that had formed to the buy side that has been run out, or that was run out here. Okay, there is that. It had been run out. This is not one of the best lines that can be drawn. There is that. So in this case there was this, and then there was this, and there was this. It has been taken out, so I would want to look at the reaction that comes off majorly of this point and see how price rallies downwards to react off of that. But I do not yet have what to use down here. We can see price has taken this off, this has been taken off, this has been taken off, these were initially taken out, these were initially taken out, and now we have liquidity that lies above this price point up. Okay, so on our chart, the price has been running up. There has been a bit of I will just put in my fib here to look at the 50% level. If it had been reached, that is more reason for me to seek price to return a bit, to take out these lows here slightly at a time, to come and look at this, because it has not taken out this price point, the liquidity that lies beneath here, but also the equilibrium price point hasn't been reached out for. So I'll patiently wait and look at if price has any reaction around this area, and if it can actually have this, what it takes to run back down. At this time, the other alternate would be that price has broken here, so it's going upwards. So if it has broken here, it has retested this fair value gap, came back because it's breaking above here, strong break. There was a retest of this fair value gap as well, a minor one. So I would also follow it up, then still continues, look at how it respects this price point, but then I will still be looking out. I am going to now focus this on looking at what exactly is happening around here. Yeah, so at the moment I'll be patient and wait for the reaction of price at those points, but in the meantime I can also look at the 5-minute chart, and what it does indicate for me is that we have had here price reached out for, there was this price point, there was a break in market structure here, fair value gap was there, then it did return to this, so we have a fair value gap that is there. I don't know whether it's the same fair value gap that we are having here that we are considering. It's, yes, it is actually the one that we are looking out for, the one just above here. It's one of the ones that we are looking out to be filled. The alternative is that the price could actually, given that there is liquidity above, it could decide to run that out first. But if it runs that, the opportunity that would be getting would be that at least price still runs back down. So either it reacts off of this or runs this out, and then try to wait and see if it does the return back to this level during the same New York Open. We'll try as much to not rush the outcome and try to wait for price to give us an actual reliable entry. So at the moment we had a buy here, and then price returns here, then rallies up. If I am to analyze this, it rallies up. There was this stop losses, we have their stop losses above here. We have so far run out those stop losses above. We had some right here. We did run out the sellers here. We have taken out their stop losses. Then we have these a high at this point. We'll wait to see for how price reacts. With that, I can add some music or a preaching in the time. kitu kimefichwa. Kila kitu kimefichwa. Stand out. Yourself is in there, your blood and sweat. Somebody can say, this man was, from the time he joined the company, he started going double digit. Without him, we could not make it. That's become. But is it a grace that a man can preserve and keep and have the wisdom to be able to replicate such that you're not entering realms and places guessing? You enter realms with very predictable principle and pattern. That is why if you get in the conversation of keeping, you must understand. Uh, Price has reached out to that fair point. I was just checking out on the forexfactory.com, and looks like today we have more. There is the non-farm employment change in at 4:15. That's some big news. That's some big news. I'll just check in here. So there could probably be a lot more priming, especially to get to this price point here. Price hasn't respected this. It might just about take this out fast before it can run back. But bottom line is that I will not be rushing this out. I definitely will not be rushing out. Anytime as it stands, I'll take it as if it comes and breaks before this low and below this fair value gap. That's when I would take that. But at the moment, I wouldn't. Now, I would also want to look at the point scaling on the upside. To do that, I will look at this won't give me as much as I wanted, but I will look at a higher time frame that can give me something that I could look for to the left and see what's the closest that I had. And I think the 4-hour chart would try to give me. We had price looking at the 4-hour chart. We had price here. We had price rallying up, returned to this fair value gap, then continued rallying up, gave us a relative equal highs, came back, then returned to take off those relative equal highs, left price points up there, then rally down for these price points up, down, then continue to rally down, and I think it took out this lower price down this side. If I'm to just zoom out and see, so price rallied lower to take out these price points, and I think if I could see well, it continued as well to take out these two. And if I could have a frame that could give me that as a whole, it is 102095 and then 102. So it took off all those price points. Now we had that price running down, came off, and then took out all those price points down here. So in the return here, of course, there was a relatively highs, took that out, then took these lows out, and there was a break in market structure here, fell a big gap in here, started from much lower to start the rally up, then came back lower, and then has been rallying up ever since. So the price scaling to look at when the time price rallied down was initially, the 4-hour chart would have been initially this price point here, which hadn't been tested from the time it broke off, and then this one was retested, but there was a gap that was left in there and then broke. There is another one in here that wasn't filled up, which is from about this price point up to about lower here, and then so price rallied down off of that before it continued, broke off of that, and then took off. So that's why we have a break in market structure shift. The initial scaling would be to that, or to this as well. This would have been also a price point to look out for. This one right here, and then the one above it. So this is a price to scale for. And if I am to put this quite rightly, it will be just about there. The next price point would be much far above here. That's the next one that would want to get a reaction of I'll try to adjust this so I can have this clearly demarcated. There is that, and then there is this point about here. So for today, I would want price to reach out at least for this, but we want to see how much of a reaction it's having here. If I drop back down, you can see it is having a reaction up there. Something is a bit of reaction up there. 5 minutes. It's within the range. On a 5-minute chart, it's playing off of that. So there is this, and the other one is still a bit quite far off. So the most likely scaling point would be this before rallying back down, because at this price point what it has created has been this, and then we want price to move back slightly lower to a level as such as this before it continues rolling up. I don't know that matches with what I would have here. Yes, to this price point before rallying up. We have got a bit of a reaction here that could probably permit price to rally above that. I think we would hold. We'll try to hold for the possibility of price running out these levels before it pushes back down here, because all of this is actually a reaction that is happening at that price point that we have seen where price has been headed for. So we'll see how it goes. This is used as an inversion fair value gap, so it will probably still push higher. So we have heard that this price level has held up. The one above here has held up so well. So the next thing we'll do to buy this inversion fair value gap here, which probably has happened. Take a look. I could probably put in one trade here. Not a good place to sell, but that's one of the trades I've taken. But the best place would have been here. But we're looking at this possibly being an inversion fair value gap. This will firstly be I would want price to return to this point here. That's when I would put in that. So this one will probably I took this trade here. If although it's a bit far down, is in case this was a consideration as an inversion fair value gap here, could have been another alternative. But the best case scenario is if we have price returning here, then we have a sell-off. The other scenario is that it might want to first take this out before it rallies lower. For this one here, the stop loss probably would be, because the other fair value gap is right, because there was a break here. This probably this has started early. I'm wondering what could have triggered this movement at this point. There's been some liquidity being injected in the market. I am not familiar with any event that could have triggered it, but it has gotten a bit choppy in here. We'll see how it runs. The other is at about 415 or 815. It has taken out the liquidity. I was still hoping it returns and then continues a bit lower. I will slightly lower for this first one. I'll lower stop loss a bit lower. I will look to see. There's been an injection of liquidity to this market, so I want to see how. I absolutely don't want price to get up so high back. We can see. Let's observe. There's an injection of liquidity about here. Let's observe how the market makes this. But this liquidity has now been taken out. Although there is some new that has been created about here that now would seek for price to run that out. I am probably staking a lot in this. This is 1.46 plus 1.97, that's about 4. I'm probably staking a lot. This first trade shouldn't have been a trade I should have taken. But it was a bounce. It would be worth it. The best place to wait for it would be this. If it fails and then price rallies up, that's okay. I still would expect price to test this point before it rallies lower. I'm going to put my stop losses to a point where I'm most convenient. I'll bring this just as well. Quick stop from here would be what is 715 711 to 71. I think to just about. I would not want my stop loss to be. This is my favorite gap. There is another wild price was breaking this, which is this one. I'll probably lower this one to this. So this would be 1.31, 1.97. I could take those. The better option would be to have just waited one of them out. So let's wait and see what the next 5 to 10 minutes have for us. Okay, let's see how it goes. I think I'll take out that one and then I'll run with just one of them. It will allow me to slightly adjust this stop loss above here. Now given the news were not good for the euro, for the favoring the euro, probably market would rally above this first. The next news that would expect are at 5:45. This market is most likely going to continue running to the upside, but I'm just going to leave that there in case there is any chance. The most likely scenario is that this is a fair value gap that it will keep rallying up. likely scenario that this keeps running up. This market coming back to retest is fair value gap should have been valid, but only that the validity could have been only up to the part where it takes out this this relatively core loss. That's the part where its validity should have ended. My price didn't take out any of these. It actually recovered in these. The likely scenario is that it could consolidate much around here before it fell into either side, and then maybe take out a buy side first. Would like to see if it breaks this, then I would be expecting it to run a bit lower. It's a song. Walk upon the waters. Take me deeper than it could ever. Oh, that has been taken out as well. I've taken a bit of big losses there, mainly due to doing that's about 2 point something USD. Yeah, we'll wait for an opportunity. above. I I will pause this, then return to it after price has run above here.